Welcome to Talk Tickers. Today, we're digging into CleanSpark's latest earnings call. Now, at first glance, it looked like a pretty clear miss. But if you stuck around, you saw a huge strategic pivot that just totally flipped the script and got the market incredibly excited. So you've got this Q4 miss, right? And then boom, a 14% rally the next day. So what gives? I mean, how does a company miss its numbers, dip in after-hours trading, and then just rip higher? That's exactly what we're going to unpack. What did the market figure out that wasn't obvious from the headlines?
All right, let's start with the headline numbers. This is what caused all that initial confusion, and you'll see pretty quickly why it was such a mixed signal.
Okay, so take a look at this. It's really a tale of two reports. In one corner, you've got the fourth quarter numbers, a miss on earnings per share, a slight miss on revenue. Not great. That's what initially spooked people. But then you look at the full year picture, and it is a completely different world. We're talking a huge swing from a loss last year to a big profit this year, and revenue growth over 100%. Just a blockbuster of a year. So yeah, let's move beyond that quarterly miss, because this is where the real story starts to unfold. The smart money, they looked right past the short-term noise and saw this absolute powerhouse of a full-year performance. First up, revenue growth, plus 102%. They didn't just grow, they more than doubled their revenue to almost $767 million. That is just explosive. And here's the thing, it wasn't just empty growth. They did it while maintaining a really impressive 55% gross margin for the whole year. And that's absolutely critical, especially when you think about the Bitcoin halving, which could have crushed their margins. This shows their operation is incredibly efficient. And all that efficiency? It led to this number, $823.4 million in adjusted EBITDA. And, even if you strip out the gains they made just from holding Bitcoin, their core operations, the actual day-to-day business, still kicked in about $305 million of that. Super solid. But look, the numbers, as good as they were really just the opening act. The main event was the story management told on the call. The CEO, Matt Schultz, basically got on and said, hey, we're not just a Bitcoin miner anymore. He painted this much bigger picture of CleanSpark as a digital infrastructure platform ready for all kinds of high-demand computing.
And they put their money where their mouth is. This wasn't just talk. They did a massive capital raise, a $1.15 billion convertible note at 0% interest, which is kind of wild. That gives them this huge war chest to go build out this vision. And at the same time, they bought back $460 million worth of their own stock. You don't do that unless you are supremely confident in where you're headed.
All right, so management's new vision. What is this compute platform they're talking about? Well, it's a massive bet to become a major player in two of the biggest tech trends out there, Bitcoin and AI. They're calling it a comprehensive compute platform. Fancy term, right? But what it really means is they're taking what they're already amazing at, which is finding and securing massive amounts of cheap power and using that to serve not just Bitcoin mining, but also the insane, power-hungry needs of the AI industry. And they have a playbook for this. It's pretty straightforward, really. Step 1, lock down the assets. They've already got a ton of power and land, and they're buying more. Step 2, go find a big-name AI tenant. They're already talking to hyperscalers for their sites. Step 3, build fast. They're partnering with companies that can roll out modular data centers super quickly. So let's be real here. This is a high-risk, high-reward situation. Everything, and I mean everything, hinges on them signing a big-name AI customer. That's the catalyst. If they do it, the whole pivot is validated. But if they don't, well, right now the AI business brings in exactly zero revenue. And analysts are saying there's maybe a 60 to 70% chance of a deal in the next 6 months. So yeah, the execution risk is huge. So, the market's verdict? After that initial head fake, how did Wall Street process this huge news? Well, they re-rated the entire company. And this timeline says it all. You can literally see the market changing its mind in real time. The stock closes, earnings come out, it dips after hours on that mess. But then, overnight, investors digested the call, they understood the AI story, and the next day, it was off to the races. A 14% rally on huge volume. A complete reversal. And it wasn't just the stock price. The options market went into a frenzy. Check this out. Almost 80% of the options trading on that day were calls. Now, for those of you who don't know, calls are basically bets that the stock is going to go up. This is a massive signal of bullish, speculative excitement. Okay, so let's put it all together and make the call. You've got this amazing news story, but you've also got some very real risks. So where do we land on this? It really boils down to this. The bull case is that CleanSpark is a one-of-a-kind way to play both Bitcoin and the AI infrastructure boom. They own the key ingredient, massive amounts of cheap power. The bear case, it's simple. The AI part is just a story for now. It's generating $0 in revenue, the execution risk is off the charts, and they're up against some huge competitors. So really, it all comes down to one thing, one single item to watch. They need to sign that first AI tenant. That's it. That's the event that proves this whole strategy is real and completely changes the valuation game for the company. So for us, the reading is an outperform. Here's why. We think the market gets the story, but maybe not how big it could be. That optionality, as we call it, of the AI pivot isn't fully baked into the stock price yet. So the risk-reward, in our view, is tilted to the upside. Because if, or when, they sign that tenant, it's a massive catalyst that we think could send the stock significantly higher. All right, that's our take. This has been Talk Tickers. And, as always, please remember, this is not financial advice.